The United States has carried out massive precision strikes on 3 key nuclear facilities in Iran, obliterating them, in his words.
A short time ago, the U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. That the strikes were a spectacular military success.
The market will almost certainly dip tomorrow after the US enters into a war with Iran. I'm going to show you 2 stocks affected by the conflict that may offer opportunity. I will also show you the stock I intend to buy on Monday after the dip. I believe it's already disconnected from its earnings, and the dip will further allow me to capture value. It would be properly awkward if the stock market doesn't dip on Monday, but I find that highly unlikely. So, first stock is Zim. Now, as you can see from the picture, it is a shipping company. And where do you reckon it's based? Based in Israel. So why do I think that Zim is an opportunity? So when the war between Israel and Iran kicked off, most of the shipping companies have obviously stopped shipping to Israel. And this is because of the danger that lies within being part of that war. But because Zim is Israeli at heart, it has continued shipping to Israel. And what does this mean? Well, this means that Zim is practically the only shipping services company that is shipping to Israel, meaning that it's doing all the shipping. It's completely swallowed all of the market share for shipping to Israel. And what that means is that it's got extremely high demand. So it's bringing in way more than it usually is. We have a look at Zim on Qualtrim. This is Zim Integrated Shipping Services Limited. And if you have a look at the stock price, you can see it's dropped 30% year to date. Over the 1 year, only 20%. But what we can also see is just how discounted this stock is. It has an incredibly low valuation at 0.93 price to earnings. That is incredibly low. And I know what you're thinking. What do you mean? How is that even possible? Well, it is true. They have a 2.15 billion net income, and their market cap is only 1.99 billion. So that's why they've got a 0.93 price to earnings. Their free cash flow yield is also 166.26%, which is, it sounds like it's wrong, but it's not. Free cash flow is 3.31 billion, and the market cap is obviously 1.99 billion. So nobody wants to invest in this stock, mainly because what if one of the shipping containers gets hit by a missile, right? It would be a perfect military strategy to go after Israel's shipping. So people aren't investing in it. Because of Zim now controlling pretty much all market share for shipping into Israel, it's making some mega money. And because of this, it can offer some crazy dividends. So it offers a dividend of $8.49. That is trailing 12 months, $8.49 per share. So that's a dividend yield of 51%. So you're paying $16.53 a share, and essentially for every $2 you put in, you get $3 out. It's a crazy dividend yield to have on a stock. So a lot of people at the minute are trying to profit off this by buying in, waiting for the dividend, and then what happens is, I think the last dividend was around here, and it crashes dramatically after every dividend. After people receive that dividend, they sell out of it. But nevertheless, it does offer an opportunity with its 51.36% dividend yield. Now, personally, this is not my kind of play. It does seem like a relatively healthy company, but just you wait until one of its ships gets hit with a missile and the stock price absolutely tanks. If we have a look at what the analysts are saying about Zim, you can see that a lot of people are downgrading it, saying hold. Some people have decreased their price objective. JP Morgan has. Barclays has actually increased their price target. So it's a mixed bag when it comes to what's going on. I mean, if you look at some of the hedge funds, I think Goldman Sachs has increased their recently increased their amount there. Goldman Sachs Corp now owns 4 million shares of the stock, increased the amount held by 20%. So some hedge funds are trying to cash in on this stock, and you can understand why. When something's got a 50% dividend yield, you are enticed to have a look and see whether it will give you those returns. Anyway, I'm not going to dive too deep into Zim integrated shipping services because it's not really my kind of it's not my kind of pick, it's not my kind of play, not something that I will be entering a position into, but that shouldn't stop you. If you feel as if this is a play that you can handle the risks, by all means go for it, and you can definitely get some high returns per year if you play your cards right. Moving on, we're going to talk about Sellbrite. Sellbrite is an Israeli stock that covers digital investigations. Now, what do I mean by that? Well, I mean that Sellbrite essentially has the ability to extract information from digital assets found in police cases, for example. So Sellbrite not only does this, but it does a number of things. So here's a good example of what Sellbrite does. For the National Intelligence Agency in the Asia Pacific area, they have a goal to improve efficacy and efficiency for accessing and extracting digital evidence. The number of cases with digital evidence continues to increase. There becomes underlying need for these companies to exist, and Sellbrite is a company that is growing incredibly fast. If we have a look at its revenue, growing at 22% per year and 22% over a 2-year basis. If we have a look at its free cash flow, it's growing that incredibly quickly over 2 years, up 92.3%. Now, its net income and EPS is negative due to a few warrant redemptions that Sellbrite has been paying for, and I think that is actually pretty much come to a conclusion now. So I believe that by next year, estimated yes to be profitable. At the minute, obviously they're not. And you can see that they are profitable because of the free cash flow. So like I said, Sellbrite is an Israeli stock, and because of this, it has absolutely tanked in the market year to date, down 28.58%. Now, the US backing Israel could actually make the stock pop tomorrow, but it's hard to tell. It could also lower the stock as the conflict increases in size, but we'll have to see. I believe that by the looks of it, it's trading at a good valuation, a free cash flow yield of 3.57% for a company that's growing revenue at 20%, and its free cash flow at a ridiculous pace of 45% up from last year. I can see this company being a reasonable buy if there wasn't the risk of Israel or its HQ being bombed overnight. You just don't know, do you, when it comes to war-ridden stocks? But nevertheless, if we look at some of its crazy statistics, annual recurring revenue grew 23% and its gross revenue retention is about 92%. So it looks like a really high quality company serving a lot of public agencies all around the world. It's quite well diversified as well. You can see here their long-term financial goals are to keep an annual recurring revenue figure of 24%. They want their revenue to be going up at 20% per year and their gross profit margin to be up between 82 and 84%, with their EBITDA between 20 and 25%. You can see here that they are actually in quite a few high-profile cases they've helped out. So the XXS Tentacion killer sentenced to life in prison. So the prosecution built its case around surveillance footage, cell phone data that allegedly linked the suspects to the motorcycle shop, and social media posts that allegedly showed them flashing money. You can see how this company is a relevant company and how it's working all around the globe, especially in the US. The Trump rally gunman as well. Investigators raced to crack into the phone used by the Trump rally gunman. And FBI agents used technology from Sellbrite, a company well known among law enforcement agencies, for helping them access data on phones seized or recovered in a criminal investigation. This is a case that highlights how much we need digital evidence in criminal cases. And this company is set to benefit from all of this. That being said, there are some competitors, I believe. Here's a few stats for you. Here we go. 90% of crimes have a digital component, which is crazy. 66% of the phones that reach the lab are locked and need unlocking. So Sellbrite does those kind of things. 77% of examiners believe they lack the tools they need, and this is where Sellbrite helps out. Yes, here we go. We can see their competitors. Here are a few of them. I haven't looked too deeply into them, to be honest with you. I do like the look of Sellbrite, but like I said, I am one that will stay away from the war in Israel for the time being. But if this is your thing, I believe that this company is quite undervalued for what it presents it's going to achieve next year, and growth is pretty quick, and it's got some good free cash flow. Its earnings will go positive. And yeah, that's it for Sellbrite from me. What is the stock that I'm going to put my money in on Monday? Well, you might have already guessed it. I mentioned it in a previous video. I said I was concerned, but it is Alphabet. Over the past year, down 7.22% when the rest of the Mag 7 are absolutely flying. If we have a look at its PE ratio, it's actually only at an 18.29 price to earnings ratio, which is crazy low. You consider that its historical average is way higher than that. Price to earnings historical average, look at that, usually 24, 23, 20, 24 basically. That was the past year. I mean, look over the past 5 years, gone up to 30 on multiple occasions. It went down 5% last week, and I am seeing this as an opportunity to buy in, especially as I believe that the stock market will drop further and it will decrease in price even more. Why do I want to enter a position into Google? Well, you can see here the obvious price disconnect from earnings. So here is their price, the blue line. You can kind of see how their net income is kind of tracks the same line, their earnings tracks the same line. Often their price is actually higher than their earnings in most cases. But then you can clearly see here now huge earnings disconnect. Earnings are all the way up there, 110 billion, and the price is all the way down here at $166. And we know exactly why this is happening, and it is LLMs. Will LLMs replace Google? So I just wanted to talk about that very quickly. Scalability of LLMs. Google handles over 8 billion searches daily. While LLMs can handle complex queries, they struggle to work efficiently at a large scale. And this leads on to my next point, which is the cost of training and maintenance. Running LLMs requires an immense computational power, making them costly. ChatGPT consumes over 500,000 kilowatts of electricity daily, enough to service about 200 million requests. So that is a whole load of electricity, and it only services 200 million requests. The market realities are that LLMs, including Gemini, also face the challenge of monetizing their search results at the scale of Google's 200 billion ad tech business. Google Ads is an ecosystem that has built precision targeting and high returns, making it the top choice for advertisers. So this here is kind of what is worrying to most investors. It's a good thing for Google, but it's also worrying to investors because they believe that search is moving in the direction of large language models like Gemini and ChatGPT, but they're not sure. I was definitely not sure on how they're going to monetize these search results through the LLMs. Whereas Google Ads makes 200 billion, it's incredibly effective. But the thing is that this actually gives Google some time. But do they even need it? I mean, they've already got Gemini. I accidentally use Gemini every day without even realizing. Earlier I talked about Sellbrite had some warrant redemptions. So I just Googled what is a warrant redemption in shares, and immediately Gemini has given me an answer. I didn't actually ask Gemini, I just asked Google, and it gave me an answer. And Google, I think, have got everyone in the palm of their hand, because everyone goes to do a regular Google search and we're using their LLM just like that already. Now, when I think about this search here, what is warrant redemption in shares? If I was to search that, I wouldn't be expecting to buy anything. Therefore, as a consumer, I'm not a valuable consumer to anyone at this point because I'm not looking to buy something. I'm not already ripened and ready to buy something. I'm just trying to find out what warrant redemption is in regards to shares, because I'm searching a question that doesn't really have anything. There's nothing that you can sell to me when I'm asking that question. You'll notice how it gives me an AI overview in those regards. But when I search for a product, Google is actively not going to give me an AI overview because they know that I am the perfect consumer to advertise to. And this is where Google really has a massive advantage, is that they can pick and choose when they want to give the AI overviews. And realistically, I don't really want an AI overview if I know the product and I'm trying to look it up. Or if I'm looking for a product, I just want to see the product straight away. I don't want an AI overview of that. And I wouldn't go to ChatGPT to try and buy a product. And this is where the whole profitability thing, I already think that most people use Google Gemini every day without realizing it. And I think that they are a step ahead already. Google also is a step ahead because it has Google Search with 4 billion users, Android with 3 billion users, Google Play Store 3 billion, Google Chrome 3 billion, YouTube 2.7 billion, Gmail 2 billion, Google Maps 2 billion, and they can integrate AI into all of these things. You can see this is some of their estimated growth. Estimated growth for revenue is not that high in December 25, but I'm expecting it to accelerate in 26 and 27, up 18.4 and 20.5% respectively. It's so easy for Google to integrate their AI solutions, and they really are leading the way with AI at the minute. It's between Google, Gemini, and ChatGPT as to who has the better large language model for everyday use at the moment. And once they integrate it into all of these applications that they own, I really believe that they are going to surge ahead. It's a massive advantage. ChatGPT doesn't have anything near this kind of application for AI, and I think that Google has a massive advantage here. These are the results for the first websites or app that consumers go to when they're researching products online, and you can see that 57% of consumers go to Google, including YouTube and Gemini. That makes 57% of people researching a product online, and that's ticked up since 2024. It was 56 and now it's 57. Now I thought that the general consensus was that LLMs were taking market share. Well, it seems to me like Google is actually taking market share and not these LLMs. When comparing prices, we can see from last year, 2024, that's increased from 39% to 40%. They still have overlying market share when you're comparing prices. And we know the exact product to buy. Obviously, Amazon has a huge market share in this area because if you want something, you go straight to Amazon. Most people go straight to Amazon and put in what they want and then buy it. But in second place is Google, and they've actually, since 2024, increased their share of that as well, up to 23%. And not only this, we are told so consistently that the young people 16 to 24-year-olds, they're not using Google anymore. They're using ChatGPT. They're using large language models. I'm 24, and I can tell you that I use Google more than I use LLMs, because Google to me already is an LLM. It gives me the answers when I want the answers, and it shows me a link directly to a product when I'm looking for a product, which is what I need. But this statistic is actually untrue. Users aged 16 to 24 are increasingly starting with Google to research products online. And Google also gained share in the lower funnel, with 30% of 16 to 24-year-olds citing Google as the first place they go when they know exactly which product they want to purchase. So when they're researching products online, you can see that's upticked over the past year from 51% to 56%. They're gaining more market share in the younger audience. Same thing here, comparing prices, upticked from 36 to 40%. And when they know exactly what product to purchase, this is where they've really steamed ahead. They've taken 7% off of Amazon, and they're sitting at 30% now from 21% last year. About 6 months ago, they were sitting at 21%. They've upticked 30%. So all this talk about LLMs, about 16 24-year-olds using LLMs and not using Google at all doesn't seem to quite be as true as you may expect. Anyway, let's see what the market does on Monday, and then we'll consider buying into Google. If you like the other two picks that are involved in the war, please subscribe, and I'll see you on the next one, guys.
I'm hopping out Ferrari. My house is 3 stories. I'm still independent cause jobs couldn't afford me. The meetings were boring. For real, I was snoring. The VP was fine, yeah, she seemed kinda corny. But that's another story. Let's get back to the topic. Right now, me and